Hbar's $4 billion valuation questioned with on-chain revenue scrutinized, and what's next? We'll answer those questions and cover the latest Hbar news in today's video. Welcome back to the Crypto Intel channel. If you enjoy staying up to date with everything around Hbar, please give this video a huge thumbs up and subscribe to the channel. That way you'll never miss updates, price predictions, and market analysis. So let's dive in. Hedera's $4 billion valuation is under fresh scrutiny after a viral DeFi report claimed the network generated $0 in revenue in 24 hours. A popular crypto analyst has taken aim at a viral claim that Hedera generated $0 in revenue over the past 24 hours, despite a market cap above $4 billion. The discussion, sparked by a recent DeFi metrics report that drew more than 230,000 views in a day, goes to the core of whether Hedera's current valuation can be justified by real network activity and emerging enterprise use cases. Dispute over zero revenue and what counts as value. Crypto Sensei highlights a post from a prominent Hbar supporter pushing back on the zero revenue narrative, arguing that Hedera does have measurable network revenue and pointing to third-party dashboards that track it. Still, the supporter concedes that current revenue is far from where it needs to be to support a $4 billion valuation. In his view, the case for Hedera is less about today's cash flows and more about its positioning as one of the few, and arguably the only, L1 that can scale to support large parts of the global economy. He cites existing on-chain marketplaces such as SaucerSwap, CentX, and Devour as proof of live activity, while insisting Hedera itself has chosen to focus on core infrastructure rather than capturing marketplace revenues directly. One past enterprise deployment on Hedera from Avery Dennison reportedly ran at over 1,000 transactions per second for most of a year, with stretches at 2,500 TPS and spikes beyond 10,000 TPS without the network breaking a sweat. Using that as a reference, the Hbar bull estimates that a single high-volume use case at scale could generate around $63 million in annual network revenue, with 10% flowing back to token holders, enterprise pilots, regulation tailwinds, and tokenized T-bills. Crypto Sensei points to a pipeline of potential large-scale applications, FedEx exploring parcel tracking on Hedera, a Seals Q Corp transactional Internet of Things platform with satellites already in orbit, an Equity Lab initiative embedding Hedera-based data provenance into Intel and NVIDIA chips via Accenture in Europe. Many of these are not yet fully switched on. On the policy front, a Hedera executive responsible for government and regulatory work appears in the video, calling this a really exciting moment for global policy as jurisdictions craft digital asset rules. In the US, the executive notes the House has moved digital asset legislation, the Senate is working on broader market structure rules, and the recently passed Genius Act for stablecoins has driven a ton of interest from both Web3 firms and traditional industries. Policymakers, the executive says, are particularly focused on Hedera's governance model, where global enterprises operate nodes and approve core updates, and on the speed and finality of its Hashgraph consensus. That combination is pitched as a draw for banks and regulated institutions. New institutional-grade products are also emerging. The analyst highlights Tamos, an all-in-one Hedera-based platform for payments, custody, tokenization, and compliance, powered by an AI engine that aims to cut anti-money laundering false positives by more than 95%. Another segment teases tokenized U.S. Treasury bills on Hedera, structured so holders get exposure to always front-month short-dated T-bills that auto-roll, qualify as high-quality liquid assets for banks, and can be redeemed for the underlying securities. Crypto Sensei underscores that many large institutions still prefer private networks initially, but often need interoperability with public chains where major stablecoins and liquidity reside, positioning Hedera as a potential bridge if its public infrastructure and governance continue to appeal to regulators. In a nutshell, the tension is clear. Today's revenue metrics appear too small to fully justify Hedera's valuation, yet there is a visible pipeline of multi-billion and multi-trillion-dollar markets, tokenized treasuries, stablecoins, supply chains, and AI data trails that could re-rate the network if even a fraction goes live at scale over the next few years. Your plans, hopes, and expectations are for it. The best and most engaging comment will be featured in the next video. Just a reminder, friends, informational and news videos are posted on the channel every day, so you won't get bored here. And of course, don't forget to subscribe to the channel and click the bell icon so you're always up to date on all the latest news. And if you liked this video, please support me with a like. Your like is my motivation. Thanks to everyone for watching, and see you next time.